There is blind justice, and then there is trading justice, so that you can finally afford to get that laser eye surgery. Not only will people find you more attractive once you ditch those old glasses, you'll be able to see your charts better. That's what we call win-win. Speaking of winning, it's time for a little trading justice, brought to you by TackleTrading.com.
Hi, welcome out to the Trading Justice Podcast presented by Tackle Trading. My name is Matt Justice. I'm one of your two hosts for the evening. The other is my co-host, Tim Justice. Tim, busy day in the market. How you doing today?
Oh, man, I'm doing great. I loved it. You know, it wasn't the move we thought it might have been, but it was still fun, still made money, so I loved it. Yeah, a lot going on there, Matt.
Yeah, a ton going on we got to talk about. We only got about 20 minutes to do it. I know you did an interview with our new producer, new member of our Tackle Trading family, Phil, so we'll get into that here in just a little bit. But I do want to talk about the Fed announcement here. I cannot say what happened today surprised me. I was not expecting the ECB event. No. I don't think any of us were, right? I think it was par for the course. Interesting though, they did talk about. First of all, Tim, just let the listeners know exactly what the central bank of the United States.
Well, you'll find this funny. I also posted a video market update over at Tackle Trading on this, and as I was prepping for the market update in this podcast today, while I was trading during the day, I didn't have time to read the actual statement. So I went over to the Federal Reserve website and I said, okay, I'm going to read the statement. And I actually clicked on January and I started reading the statement. I'm like, this doesn't quite seem right. And I look at it, it says January 2014. I click back and then I click 2015.
Oh, gotcha. We're gonna curtail another $15 billion.
No, but I'll tell you, Matt, outside of the curtail part, almost the exact same message. It's almost like they copy and paste this stuff and then they just change like 8 words. It's so crazy.
I think it is. I think that's exactly what they do. I don't think they're doing anything that different on a month-to-month, 6-week basis. I think what the Fed did today was what we all expect them to do was to stick to their guns on low interest right now. They've only been doing that since 2008, 2009. But it was interesting. There was a subtle difference I saw today. And they did talk about June. And for the longest time, Tim, I've been thinking the Fed was going to act latter part of second quarter 2015, early part of third quarter. And so it looks like they are targeting a second to third quarter interest rate hike. At this point, would you be surprised if we do not see interest rates going up somewhere immediately before the third quarter or during the third quarter of this year?
Well, to be honest, I would not be surprised, because if you have economic slowdown and they're worried about throwing another wrench into it, they could easily change their tone through the year. That's the plan, but would it surprise me if they backed away from that plan because of the crude oil crash and if there's problems around the globe, different things that are happening right now, Matt, that are in the works, in the hopper, as they say. I wouldn't be surprised if they came off of that, but I know that's the plan. That's what they keep telling everybody. They don't want to tell everybody that and then change their mind, but it wouldn't surprise me, I got to tell you.
It will be absolutely fascinating for about 6 months to a year to be able to sell the euro, sell the Swiss franc, buy a stronger currency in the dollar, and get paid in interest. That is amazing to me. Oh, my wow. But that's what we're faced with right now. I mean, we have the reverse carry trade right now. It's insane.
Well, and that's something that I think people need to learn about. On the podcast, we talk about a lot of stuff. We're not here really to go through like an educational session in the sense that we're going to detail all the definitions and stuff. But the swap rate is something that when you're a new currency trader, you got to at least look into. Learn how to trade the carry trade. Learn how to or at least understand why banks would carry a trade like that. It is the most popular trade in the world. It's the biggest trade in the world. And when you are an investor or position,
real quick. Yeah. You talked about the banks. You talked about the financial firms. The carry trade's very simple, guys. You're going to sell currency. You're going to buy a different currency. The currency that has a higher interest rate is the one you're buying. You get to carry the positive interest rate. It's called swap rates. It's a real simple trade. I got videos on over at tackletrade.com. So if you just want to go over the tackle trading, type in carry trade, CARRY. You can watch a nice little video on the carry trade. But think about this, Tim. Okay, in this environment, what happens to the value of the dollar? It's got to go back up, right? If in a rising interest rate environment, the dollar has to go up. Would you agree with that?
Well, I mean, it's almost like every condition in the economy is forcing the dollar up. Commodities like oil are dropping. Then you've got the ECB going to be, printing money in March that will have a direct impact. A lot of this stuff is not just theoretical, guys. They're going to be printing and spending money in euros. They're going to create that environment. So they're going through their own quantitative easing program. The U.S. dollar, with interest going up and the Fed's not printing anymore, and they killed QE in October, how could it not go up? I'm smart enough. Go ahead.
The thing about it is, Tim, and I'm getting some static on your end. I don't know if it's you or me. But the thing about it is basically there are some very, very, very complicated things in trading, okay? And then there are some simple things in trading. There's an old rule that says don't fight the Fed, okay? That's not just the Fed, it's the European Central Bank, it's the Bank of Japan, it's the Swiss, it's the Brits, it's everybody. You don't fight central bankers. They have a tendency to control monetary policy, and they have a tendency to tell us what they're going to do. So the ECB for 6 months told us they're going to print money. Well, lo and behold, the euro goes down. And then they announce they're going to print money, and the euro goes down even more. And then they're actually going to start printing money in March, and it's going to go down even more. And that's not that difficult. So just learn how to sell the euro and buy the dollar and profit in the environment. It really can be as simple as that. I wasn't surprised today by the movements in the markets, how the markets respond to a negative to the announcement, Tim, because quite frankly, I think they were more specific tonight or today than they have in recent history about when they were going to raise rates. It was left to us just to kind of cipher through their speeches and their code they write in their announcements. But I think they were a little bit specific today in terms of talking about when they're looking to raise rates. And even though they did in a tricky way, but I think they were a little specific.
And I think they were trying to send that message. The Federal Reserve is playing a dance with the market. They're dancing with the market at all times with their information, the way they release it, the way they word it. There's a reason why they're so particular about what they say. And so when they start to talk about raising rates, they want to let the market know well in advance what they're planning on doing, so that when it happens, the market's already digested it. They don't want to shock the market. They don't want to do what the Swiss did a couple weeks ago when they unpegged. They don't want to shock the market because they know that would have too much of a dramatic impact on banks.
No, agreed 100%. Now that we have the and by the way, 2 great news-based trades today, right? You stayed in your trade, correct?
I did,
Short euro, I stayed in short euro. Made about 40% on the movement. So I would say great. I would say doubles. Not a home run, but it was a gap or two right center field, I would say was today. I will tell you, I did have a home run in the marketplace today, though. And because of the combination of what was happening in the currency, I was short 2 or 3 different energy companies, and I was heavily short IWM today. And so update people on kind of what happened to the market and tell them why I'm so happy that the market went down today.
Well, the market actually opened up, and it wasn't all about currencies to begin with. It was all about oil and energy. In fact, if you looked into those and financials as well, Coach Gino called it on the Coaches Show the other day, and the market opened up and energy was getting crushed, and it continued to get crushed throughout the day. I think crude oil, Matt, ended up down, I think it closed around 44, 43. It was about 4% on the sell-off, and that was incredible. Some select names in the energy space were down 6-7%, and it just goes to show something that I have learned over the years is that there's no such thing as it's already gone down too far. I'm part of like these different trading groups and clubs and stuff, and I see people posting, and a lot of these old school guys, they've been talking for months, Matt, about buying energy. And I just keep shaking my head. I'm like, they're like, oh, well, it pays this and that. And I'm just like, maybe in select areas, if you got a protective put or a plan, I could understand it. But they're just out there with this old school logic like, oh, they can't go any lower. And I'm just thinking that's not technical analysis. And you were right on it, Matt. They were downtrends. In fact, some of them were such good setups. I went through this morning and built a watch list of 25 energy companies that were triggering today. That I could pull the trigger on and traded a few of them. But I don't know if there's...
Well,
they're done.
Honestly, they're not done. And I remember back when gold was it was about 2 years ago, gold was at about 1550. And I did a video and posted on YouTube because I got sick of everybody going out there and saying, oh my goodness, this is an opportunity to go out there and buy gold when it's at a low point. I'm like, what are you guys talking about? It just broke support. It's going lower. And, I started seeing the same thing at, $70 on crude. People saying, oh man, this is an opportunity to buy. And I kept saying, no, it's going down. It's going down at $60, it's going down at $50, it's going down. Even when it based at, $45 to $47, people are saying, oh man, let's go out there and let's buy oil, let's buy oil, let's buy oil. And I'm like, why would you do that? It's in a low base. It's going to break support and it's going to go down further. And you know what? I'm not always right. By no means am I always right. But I do have a tendency to know a little bit about the commodities market and the currency market. And I'll tell you right now, in my opinion, I see oil in the mid 30s range eventually before we reassess it. But it wouldn't shock me to see crude go down to $30, Tim. That's where the low point was in 2008.
This is one of my favorite things right now in the market is crude oil. And I'll share a story with you that might register with some of the traders out there. I've been bearish on crude oil for a long time. I continue to be, but I'm also a day trader. And I got stuck on the wrong side of the trade today, Matt. It was my only real losing trade today, and it cut back from some of the profit I made. But maybe somebody can learn from it. I know it's hard to talk about your losers, but even coaches like Tim and Matt, we do. So crude on Wednesdays at 10:30 Eastern, crude oil has their inventories report. It's a volatility event. It's a news-based event. And I've been trading the crude oil futures directionally lately, and I like them. You can usually play the 30 deltas and get them pretty cheap and, speculate on them. And they're nice. And, I was in there and I saw crude spike and I saw a pullback off that spike and I grabbed it. And I grabbed a call contract and it kept running up. It ran up 50 cents or so. And sold the call contract and made a little money. And then it came back, and I thought, just a bull retracement into a new trend, maybe a corrective wave. Crude's going to find itself, through the day a little bit better. So I bought it again, and it dropped. And crude midday just kept dropping. I'm waiting on a better fill. I'm setting my limit out there, trying to haggle over 2 cents on the contract, and then I don't get filled and it drops 10 more cents, and I got to wait for it an hour. And in the back of my brain, I'm like, dude, you should be short. So I just keep trying to fight the fill, or fight the fill price, and I nickeled and dimed my way into a losing day on crude because I, kind of took the wrong side of it, and I couldn't get away from it quick enough. And it's a good thing to tell people out there.
A couple things, Tim. Yeah. A couple things. Number one, how many times we pick the bottom and we're successful on?
Not many.
Because you gotta be able to. Well, let me say it like this: what is the theory of momentum? Right? Objects in motion have a tendency to do what?
Stay in motion.
Stay in motion. Okay. So if crude is going down, even if it starts to base a little bit, what is the probability of the next movement?
Oh, dude, I know. That's what I'm saying, though.
But we get emotional about it, though, right? Even as venture traders, we still get emotional about it. I do it all the time in the currency market, Tim. All the time. The other day, between Monday and Tuesday, in fact, I called you and I was complaining up a storm about it. I was like, technically, I'm sound on all this, but I've lost like 9 out of 10 trades. But technically, I'm doing things the right way. They're all retracements, and they'll go back up a couple pips, maybe 5-10 pips, and then all of a sudden, sudden, boom, knocks my stop out, and I lose 9 or 10 trades, and I'm kicking and screaming, and and then I look at kind of what the drawdown to the account was, and I lost $1,000. And I'm like, oh, okay, put it into perspective. But everybody's going to have those moments where, we just have a loss. Everybody has losses. But one trade in crude can make up what you did today. One trade in a currency can make up what I did on Monday and Tuesday. And so I just find it that the only way to get money, to make money, is to get money working. That's it. You always got to get out there, and you got to keep applying. You got to keep applying, and sometimes we get emotional about it. I certainly do. I know you do. I think everybody does. We're emotional beings. We're going to get emotional about it. But we got to. One of the things that can control that emotion is the technical analysis, though. Making sure that we're doing proper techniques, making sure that we're going out there and we're applying the things that we need to apply to make sure that we have a winning day. And even though you lost some money on crude, you made some money today, right?
That's right. In fact, I'm not ready to share my strategy yet with the team until I name it.
We got to test it. We got to test it.
But that one's been doing well. But I have 2 points, and then we got to wrap this one. I got to go see a friend. But I got 2 points I want to add to what you just said. And I want everybody to kind of lean in and think about this. Money management is the answer to any emotional problem when you're trading. Because you're gonna lose your mind temporarily for 5 minutes, right? You're gonna lose your brain. You're gonna lose your logic. Every now and then, you might even just lapse in memory or whatever it is. Who knows? Yeah. Your emotions will get involved. Your humanity will get involved. That's why you position size and you understand your risk at all times. So when I take a loss, it's not going to hurt my account because I position size well. Okay, that's the most important thing in trading. And then the second thing I'll tell you, Matt, is that, guys, if you ever want to get in and do some short-term stuff, whether it's day trading or swing trading, kind of stick to one direction. Even as a veteran, I shouldn't be trying to flip it back and forth too much. It's better to kind of look at the conditions in the market that day, that time, and look for entry points, either bullish or bearish. Matt, what did we learn from the crude thing? The primary trend was down and the momentum was down. Why am I overthinking one event, on a random Wednesday when I should probably just look at the primary trend?
Because you were in front of the market. I mean, that's why. You were in front of the market. You wanted to make a trade. So you're like, okay, I'm just going to make a trade. The most probable trades that retraces back into resistance. So let me pick up a few coins, right? Don't force the action. Let the action come to you. So and I think that's something we can all learn. And as for the Fed, if for the listeners out there, this is the first time you've really kind of been focusing on the market, understand what central banks do and why they do it, guys. It's the number one driver of the market right now, and it's going to be the number one driver of the world economy for the better part of the next 2, 3, 4 years. And because it's not going to be easy, nor is it going to be short term in unwinding what the Fed has done. I think you're going to have a decade-long, impact in terms of what the Fed has done, what the ECB has done, what the Swiss has done, what the Japanese have done. And so understand what the Fed does. And over there at Tackle Trading, we can help you do that. Tim, if you don't mind, I do have one quick announcement for the podcast listeners out there. Your niece, Hagen Justice, she submitted a poem to her high school, and her high school teacher, in one of her writing classes, her high school teacher decided to submit it to some publication. I do not know the publication yet. I will find out. We just found out about this about an hour ago. And I want to end the podcast on this poem my daughter wrote that is going to be published. Now, I am as proud could be of my daughter getting published at the age of 17. She just turned 17. So I'm going to end the podcast on this poem, and you let me know your last thoughts after this. She says she names the poem "I Am From," and she says, "I am from playing witches on the back porch. I am from Scrabble and catchphrase. I am from Star Wars and from Lord of the Rings. I am from Grandpa's Lemonade and Grandma's Brownies. I am from Omni. I'm from Barbies and Brats, from Brumrock and Easter, and our two special cats. I am from Dark Hair, Eyes, and Skin. I am from Vacation and Running in the Wind. I am from My Little Sunshine, from sunburns to scrapped knees. I am from Vacation and Running in the Wind. I am my little sunshine, from sunburns and scrapped knees, and from ice cream and sticky fingers wiped clean. I am from Grandma E's Teddy Bear and Big Family Reunions. I am from the swimming pool at Grandma's, and I am from family. And that is all I have been given me. I just thought that was so good.
Wow.
Anyways, she got published, man.
You have talented kids, I got to tell you. Just beautiful, wonderful kids. Awesome. They, and this is something, my last thought will actually kind of connect with that a little bit. We had a meeting with one of our mentors and colleagues a couple of weeks ago, and he said something that struck me, Matt, that, the thing that we can pass down to our kids is our legacy and our knowledge and our wisdom, right? And put them in a position to where they can succeed. And, Phil and I, in the interview that you guys are going to listen to in just a minute, we talked about entrepreneurship and also just having the right mindset and growing as a person. And some of those things are embedded in us when we're born, probably. It's that old nature nurture thing. But I think that you can nurture a mindset, and you can, same thing. Look at this young lady growing up, and holy cow, that was cool. Tell her I loved it.
I will definitely tell her that, and she'll probably be embarrassed that I published it on the podcast.
Mm-hmm.
But I don't care. I am as proud could be right now. And as a parent, the only thing you can do, Tim, is give your kids every opportunity they can have. And she's doing awesome. So you've been listening to the Trading Justice Podcast, everybody, presented by Tackle Trading. Check out everything we got going over there at Tackle Trading, from Gino's scouting report to my Forex report on a weekly basis, and everything that Noah and Tim do in the coaches shows and the blogs and the videos and the clubhouse and everything else we have out there. So check us out over there. Once again, www.tackletrading.com. Get out there, get in the game, and control your financial future.
Okay, welcome back to the Trading Justice Podcast. This is your host, Tim Justice, and I have a special guest here today that I want to introduce to everybody. His name is Phil Kilcrease. Phil is a very interesting man, and I met him about 3 months ago, I believe, maybe a little bit less, and he was an associate friend of a mutual friend of mine, somebody that I knew for a long time named Travis. And I reached out to Travis and I said, hey, do you know anybody creative that can help our team grow and work on projects and maybe come up with some good ideas? And he said, Phil Kilcrease. And Phil is now the producer for our Trading Justice podcast. He also does production on our coaches shows and a lot of the work over there at Tackle Trading. Phil, welcome to the show, first of all. And how are you doing tonight?
Well, thank you. Doing all right. Been hard at work today, behind the scenes, getting stuff more organized for you fine trading chaps.
Yeah, you do a lot of things that people probably aren't aware of that they would need to thank you for if they knew. I mean, you're organizing things, you're tagging it, you're making it easier for our users and our members and even the coaches to kind of use the site and find information and get the information from the podcasts and the shows. And I know that you've done a lot of work, and I appreciate it. Let me ask you, how much did you know about trading, investing, finance before you came on with our team?
I went up through Finance 102 at the University of Utah, so not too terribly much. I knew what, beyond what they teach you, I knew what Forex, the Forex market was, different types of trades like options, things like that. But beyond that, the first coaches show I helped record when you were talking about candlesticks and inverted butterflies and anvil trades, it's just like, what is all this?
Yeah, I mean, it can be a little intimidating for anybody new. And actually, I knew that this was going to be a new area of content for you, but that's not really why I brought you in as one of our team members. Your expertise is not necessarily in trading, but I'm going to be very interested to watch and see how you grow. And just from being around the guys, networking with some of these great traders like Gino and Noah and Matt and myself, I think you're going to find a lot of information very valuable. Hopefully we'll get you trading soon.
Once I get some other things squared away, I might start a small, super basic overnight trading kind of thing. It's just my skill sets, as you mentioned, lie elsewhere. And it depends on how much time I have. But
yeah.
There were some of the trades like with the Swiss franc crashing, and it was just Like, yeah, it was 500 pips. And I now know what that means, too. That swing is just like, that's just free money. If you are there for the trade, that's just begging to be traded. If you don't, someone else will, and you don't get the money.
Right. You know, and I would tell you this is same advice I give any new trader that comes into our curriculum, our classes, asks me for help, anything, is you always have to practice before you do live. So one thing that, and by the way, this has nothing to do with the conversation today that I was planning, but might as well talk about it a little bit. One thing that I would tell you, and the advice I would give you, is start in a practice account so you don't risk real money until you prove that you know how to execute the trades. You know, there are little things that new traders need to learn how to do. I mean, imagine if you were playing one of those high-end, first-person shooter games like, I guess it's Halo, or what do these kids play these days, Phil? You probably know.
Yeah, something like TF2 or something, yeah.
Yeah. So if you walked into that and you were in an environment where you had to execute in the game against experts at the game, but you didn't even know how to hold your controller or how to macro your keyboard or something, it'd probably be a little bit not a very fair match. And so in trading, you kind of have some of that a little bit because you got to learn the buttons. You got to learn how to click stuff in there. You got to make sure you know how the broker executes trades. So I would recommend a practice account and probably TD Ameritrade because all the guys use Thinkorswim. That would be the easiest way for you to get access to something. And they do a paper money account there where you don't have to really start with any real money. And you can start practicing and following some of the coaches' trades that they do. So that might be a good way for you to practice.
Yeah, that actually sounds like it can follow the scouting report at the very least and try executing those.
Yeah.
Even the first scouting report I helped edit and put up, Gino was just killing it with Caterpillar. And that one finally ended today. He finally pulled out of that. But
yeah, you know, and that's the thing is you're already getting all this valuable information as being a part of the team. You might as well take advantage of it. But that's not really what I want to talk to you about too much tonight. I actually want to talk to you about your perspective, your journey, your life a little bit, what brought you to tackle trading. You actually were a student at the University of Utah, and you were a part of their entrepreneurial program. So you went to school to study how to do business, right?
That's correct. I treated it as I treated the business and entrepreneurial program as my how-to class, essentially, of the basics of running a business and the general strategies and things. Some of the higher level classes focused more on corporate strategy a bit, but there are things that can be extracted from that can still apply to small businesses, such as doing a SWOT analysis or doing a case study on a competitor or on your own company after it's aged a bit and you have data to work with. Those are very valuable skills that can be applied to any company. It doesn't matter the size. And aside from things like I did take the basic accountancy classes and beyond super basic GAAP principles, I don't remember too terribly much, but I'm not an accountant. So I only had a bare minimum amount of those to take. I'm not going to be doing super crazy things with that or anything, or trying to do derivatives or anything. And fortunately, the business that I ended up starting with was Fifth Street and Fifth Street Games, and that's a board game publishing company. Just super, super basic in terms of tracking inventory. So there wasn't even a need there. And I actually became part of what's called the Foundry. It is a business accelerator / incubator program up at the U, and that's where I actually met Travis. And he's the one that he and Rob Webker introduced me to Foundry program, and I'm actually implementing some of the lessons learned there in tackle trading, and I'd say we're already seeing results myself.
Oh, I absolutely believe that, 100% that we are seeing results, and I know that you're bringing in some of that different perspective. Traders, they have a perspective. We know how to run our business. When you start building teams, you got to have communication. You have to have accountability. You got to make sure that things are getting done and all that kind of stuff. But I do want to ask you and you can tell me, is the Foundry kind of like Fight Club, where the first rule of the Foundry is that you don't talk about the Foundry?
it has kind of that. It has had that mentality in the past. Not so much that don't talk about it, is in so much as the Space Monkeys approach mid-movie, in that you basically don't know jack, and other than your own business, and we're going to teach you to run your business and any other business even better than you already are, and we're going to treat you like a CEO. We're not going to handhold you in the sense that, and this is how you make a business plan, and this is how you approach a bank. No, you're treated like a CEO. If you're going to the weekly meetings, you're treated with respect. You're treated as a professional, and if you don't deliver on your management report, other people will call you to task. Like, dude, what the hell? Come on, you've been working on this particular little project for 3 weeks, and I know for a fact from previous management reports that only takes you 2 hours to do. What's going on? And so there's this accountability that comes along with it as well. And the mentality has changed a bit, just because you get different mixes of people. People move on and stop attending. The core cohort for the first 4 foundries did have that mentality, though, of just the whole bare knuckle brawling kind of business, subversive kind of thing. There was somebody, as an example, one of the OGs of the very first foundry. They were doing a brainstorming session, and this one kid goes up, I got it. He grabs a marker and he draws a circle, and then he draws another circle like a Venn diagram, and he labels the first one, this is social media, and then he labels the other one, this is porn. There's something in the middle here, and everyone else went just, no. So yeah, it was pretty wild.
Well, I'll tell you, I've met 3 or 4 people who've been a part of this, I think, incubator, you used the term of a minute ago, and I find them to be very sharp. And they were sharp going in, they were sharper going out. And I think it's a real good testament. And one of the reasons I wanted to talk about this is, guys, if you're out there listening to the Trading Justice podcast and you're thinking to yourself, what do I need to do to take the next step? You may want to surround yourself with people that will challenge you and push you and hold you accountable and help you grow. It's all about team building here. And one of the most interesting things about this foundry and also the entrepreneurial program at the University of Utah, I find it to be very unique. When I think of an entrepreneur, I think of a self-made man, right? Some of the guys that I grew up with, they're dads who started construction companies and built roads based on government contracts, and they would go out and they'd push their businesses and they would hire people. I think of people who are out there, shaking hands and doing the real stuff, or building businesses and taking chances. But you actually still, you can train your brain to think that way. And and this program, they really say, okay, we're going to bring you in. We're going to put you in an environment where you can grow into this and become this even while you're in school. They don't do that with a lot of degrees, do they, Phil?
They do not, and the Foundry actually was one of the first programs in the U.S. that challenged that notion of that you put forth, like actually allowing students in school to acknowledge, oh, hey, they can run a business. And as in the first cohort, I was part of the third one, so the first 2 kind of it ruffled a lot of feathers, because there was this just false notion of, oh, students can't run businesses. It'd be too hard. They have to take finals, and they've got this and that, and they're not smart enough. They don't have the training, and it's like that's a load of garbage, and we'll show you why that's a load of garbage. And it's now the case that it's accepted, like, oh, if you're a student, if you have a good idea, because that is part of the Foundry as well, is don't be afraid of an idea being bad if you're like testing it, if you're market testing it, and it turns out that you need to torpedo a business just because the market doesn't bear it out, or it's not profitable enough or whatever. That's not a failure. A failure is like a multi-billion-dollar bankruptcy kind of thing. That's a failure. But even then, with a student entrepreneur, you're going to likely be initially dealing with smaller volumes, thousands in sales a month at most, at least initially. So you're not going to an implosion isn't as big of a deal compared to like a middle corporate America sized company, 300-400 employees. So, and the entrepreneurship program in general at the U also kind of reinforces that of the same strategies that work at big companies don't work at small ones, and vice versa. There are some things that do not translate over.
Sure.
So.
You know, I'm thinking of the people I grew up with now. You actually made me go back and think of, you know, in terms of some nostalgia here. And I was actually pondering this question: are entrepreneurs made or are they born? And I'm not sure what the answer is. I'll get your answer here in just a minute. But I'm thinking, I have some friends that I grew up with that I've known since I was 2, 3, 4 years old. Our families were friends, and we were friends, and we were buddies. We went to the same elementary, junior high, high school. I've known them forever. And I'm thinking of a few individuals particularly, and they were entrepreneurs from 10 years old. I remember this one guy, he was out there mowing lawns, even though he didn't have to. He didn't need the money, but he had this instinct that, hey, if I push this lawnmower around, I can make $10, and I'm going to go next door and I'm going to do the same thing, and I'm going to go ask old Mrs. Mildred Johnson down the road, and I'm going to do the same thing. And he built a lawnmower business and clientele, and he delivered his service every week or whatever it was, and he made good money. And I knew another friend, and he's always been an entrepreneur. When we were 16, he actually dropped some cash and bought one of those curbing machines to where he can lay concrete curbing in people's backyards. And he hired his friends. So he owned a business, and we're 16 years old, and he's pulling his curbing machine around all over the county and doing curbing jobs. And I thought that was the coolest thing ever. So some people might be kind of born with an entrepreneurial spirit, but others, I think you can develop that, right? I mean, what have you seen in your experiences? Because you're around these guys. You know, they're students, they're in their 20s. And did they always have that instinct, do you think, or are they developing it as they go?
A little bit of both. And entrepreneurs are made. They are not born. There are people who might have more of a predilection toward it, or have that kind of just, because it's a form of creativity. You, as a side look at that, take a webcomic artist like the people who do Penny Arcade, Questionable Content, Jeff Jacques. They were creators of other content first, and they just happened to be able to turn that content into something that would support themselves. It's just a learning process, just like learning mathematics or some form of science. It comes easier to some people than others, and that, just like the predilection I mentioned. It sounds like the chaps that you rolled with definitely kind of had that drive to cause mayhem and trouble early on, and that kind of is a differentiator, especially at that age, as young as 10. That's at most people tend to do, like a paper route or lawn mowing, but only if they really need the money. Mm-hmm. But from what you were saying, he didn't need it. It was like, you know what? This could be cool and this could be fun, and then I'm learning from it.
Sure.
That particular mindset isn't it. It seems to be a bit more based on how you're raised as well. So there's a bit of a home environment associated with that.
Yeah, I think so. I think some of it is environment.
In entrepreneurial classes and some of the studies they have. Yeah. So, but that isn't to say that the people who have to learn it just whole cloth can't get up to that speed. It just may take more work. So I would say that I was made, I was not born. If it weren't for the Foundry, the Fifth Street Games Company wouldn't exist. I actually was up at the University of Utah trying to find out about entrepreneurship programs and clubs, and I was looking for a Foundry 3 months before it existed, and the guy said, "Oh, if the person I talked to about it, about a club like that, oh, if something does develop, I'll let you know." The dude didn't let me know. The punk.
Also,
It's
a
all
college
good.
student didn't follow through. I can't imagine. But
Oh, it was actually an administrator, but
Oh.
same difference.
same kind of thing. Yeah.
I can't imagine. The ivory towers are infallible. I'll hold my tongue.
I think there's a very close fit between what we're doing here, talking about entrepreneurs in general and also traders, because I think that you're right. You have to still refine those instincts, those base feelings that you have about the world and business, and maybe you're motivated, maybe you're driven, maybe you're not, and you still have to work it. So I do agree with you. Much of what makes you a great entrepreneur is made, and mindset is something that you can develop and you can foster and you can improve upon. There are little steps that happen, and it's like one of those things in life. It can snowball. Once you start taking control of the way that you interact with the world, instead of feeling like you're a victim, that you're always that's empowering. And the more you're empowered, the more confident you'll be. You'll go into those business meetings and you'll shake somebody's hands, and you'll have the confidence to be able to present yourself in whatever and whoever you are. I famously, Phil, I wear jeans into meetings sometimes, and I know that not everybody thinks that's appropriate, but I've had lunch with millionaires, and I wear my jeans and a suit jacket, and it's my look, I guess. I also have suits, and I'm willing to wear a suit, but I've always said this. If somebody's going to judge me for looking nice, but not just, quote unquote, the exact way they think is appropriate, I don't know if I'm going to get down with that person anyway. I want to ask you a couple of questions here about this general conversation, and I'm enjoying this quite a bit. When you take somebody and you put them in a program like this and they start to network, and obviously they're still dealing with all the stuff in their life, how radical of a mindset shift does it take to actually get to become one of the top members of that program?
I would say that's idiosyncratic. It depends on the person. If you are actively engaged and want to be engaged, you will be one of the people who sticks around. There's usually 2 to 4 people per cohort that kind of become part of the fold, so to speak. And it's a self-selecting process, absolutely. If you aren't naturally that way, if you're a little introverted or don't necessarily have the groundwork of how to properly test a business idea to see if you should follow through on it, there's going to be some extra work on that, but it is a matter of mindset, and the people who initially apply tend to already have it anyway. They want, as you said, they want to start taking control. They want to try and run their own business, even if it's just a lifestyle company, not necessarily multi-billion-dollar Bugattis flying out of their armpits or anything. Is just they're there, they're engaged, they ask questions, they just hoover up all the information they can. You mentioned another big thing of the Foundry that I hadn't mentioned yet is networking. Part of the process of learning is doing the management reports. You're in a room with 19 other people. Those 19 other people will probably know another 20 people themselves in various professional ways. And the idea is, I have this total showstopper problem. You go in on the weekly CEOs, and 9 times out of 10, there will be someone in the room going, "That's a showstopper for you? Dude, I know someone who can take care of that for you, no problem. Mm-hmm. Let me introduce you." So that you do learn to network, and you do learn to treat those networks with respect as well. You don't want to extend or overstay your welcome, or just wear people out of, oh God, it's Jim Bob again. I'm going to avert my eyes and hope that he doesn't walk over and talk to me. Those people kind of get self-selected, even though that kind of person tends to have a mentality of they're engaged and they want to be in it. They don't quite get that there is a limit to how much you can ask of people, kind of thing.
Mm-hmm. Yeah.
And they people like that often don't necessarily listen to what they're being told anyway. They're just looking for confirmation.
Well, I'll tell you, what you just said there, I think every one of our listeners can use in their own life in regards to their trading, their investing, their businesses. There's several points there that just jumped out at me, and I think it's wisdom just right in our face. Number one, if you think there's a problem so big you can't conquer it, and you're ready to throw your hands in the air and give up, well, maybe there's somebody that can help you with that. Throw the idea out there to a team. Throw the idea out there to a group and say, hey, guys, I've been working on this for a long time. I can't figure out what is missing. Can anybody point me in the right direction? And usually if you're with a good team, like we have over at Tackle Trading, or like you had with the Foundry as you were developing your mindset, there's always going to be somebody, 1, 2, 3, 4 people like, oh, yeah, look at this video or read this blog or here's an article I read or here, let me give you this tip or whatever it is. And, or, hey, I can fix that for you. It might be something technical, right? Like, oh yeah, these are the settings you need for your Thinkorswim or whatever it is. And so asking for help, it seems like overwhelming for some people. I don't know where that comes from. And I know, just like you said, I think what it is maybe people don't want to feel like they're imposing or they're just sitting there begging or asking. But the reality is, if you're contributing to the team in some areas, like you're posting and you're giving feedback and you're showing up to the coaches shows and you're, listening to podcasts and sharing the information with your friends, guess what? The team's more likely to buck right up and give you the help when you need it. I think that's all part about being around the right people and networking, Phil. And I know that's what we're building over at Tackle Trading. And I'll give everybody out there who's listening a challenge. Go into the clubhouse every day, scan through the questions and see if one of your teammates, one of the other members has something you can help them with. Or if you do have a question, post it out there for the public and so we can all talk about it. We can conquer more together than you can on your own. And that's kind of the whole point, I think. Right, Phil? I
would agree. And that's one of the things that I think is just coming in from the outside into Tackle Trading as part of the team that I do find kind of striking is very much day trading tends to be from just a layperson is super competitive, dog eat dog, Wolf of Wall Street kind of thing. Just I get mine, you don't get it. Too bad for you. I'll take yours as well. Tackle Trading is not like that at all. Everyone who's in the clubhouse and in the coaches show, hanging around the site, everyone is helping each other.
Yeah,
and that's really, really cool. Of like, oh, here's this trade. For one, everyone has different portfolios, so you're not necessarily going to be doing the same trades anyway. But for the larger ones, such as the scouting report, the fact those are being shared and everything, once you start getting volume, that those kind of trades can start affecting things, depending on what's being traded and how many people eventually join in. But the fact that there's this mentality in the question feed of the coaches show and in the clubhouse is it isn't dog eat dog. It's how can I help you understand this as well, both from the coaches and from the other team members that are joining in as well. It's amazing.
Let me explain it to you a little bit.
Not anything like it.
I think you'll love this. And if you understand this perspective, because what you're touching on here is actually a really important thing to understand if you're out there and you're a new trader and whatnot. Because I get the question all the time, Phil. Well, why are you going to share your ideas? Aren't they going to lose? They're going to become watered down. People will steal them or something. Or hey, if you give out your trading strategy on how to do that, well, then the market will just take it. What I've come to realize, and anybody who's traded long enough, comes to realize, there's $4 trillion traded hands every day just in the Forex market alone. It's like every day, the hundreds of billions of dollars made in transactions in the bond and stock markets. The market is so massive that we can't even really wrap our head around it. A guy in Utah or a guy in Redondo Beach, California, or in London, UK, or in Singapore, it doesn't matter where you are. You can be as successful as you ever want to be. You can shout your ideas from the rooftop. You are not going to put a dent in the market. And that's where you can just say, I'm going to share with the market. And Matt, I hear you came in here. Welcome, my friend. We're having a great conversation.
You know what? I was just listening to the just the last couple of minutes, and Phil talking about the coach's show, and you talking about kind of understanding, the one thing that people always go, why would you share? Why would you share? The reality is, Tim, you nailed it on the head. There's enough money in the market for all of us. That's the reality.
And that also kind of transitions to the foundry mindset a little bit as well, in that unless it's proprietary, like code or something that you're waiting to patent, that is super critical that you don't share. The foundry is very much that mindset of you're part of a team, and you don't hide your idea, because ideas are super cheap. And no, if you're afraid of someone stealing your idea, you're in the wrong place. It's hard to steal an idea. Or I'll share my idea, but I'm going to out-execute you anyway, so who cares?
Yeah.
Yeah. That's another great point, Phil, because even you can take two traders trading the exact same system, one with more experience, one with understanding of better management. They could trade the exact same role, but at the end of the day, the trader with more experience and the trader that has a sound system, understands management, they're going to make a bigger more money than the one that doesn't.
You guys have been listening to the Trading Justice podcast with Tim, Matt, and Phil now, who is our producer, and he's a team member over at tackletrading.com. He's doing a lot for you guys out there. If you need any help, you can hit him up right there in the clubhouse. You can direct message people on the site. He's using some of our Twitter stuff. He's putting our social media out. And I just see your role expanding, Phil. I think that as you embrace what we're doing, and you already have, I know that, but I just see that you're going to be a big part of what we do in delivering our product and our content to our users. So, I'm excited to see what you can do.
I'm excited to help, because I do see something different here. And I appreciate the opportunity to join you guys. I really do.
You've been listening to the Trading Justice podcast. If you've enjoyed yourself and think that the conversations and topics we've covered are important, help spread the word. Give us your feedback. 5 stars on iTunes, like us on Facebook, and follow us on Twitter. The Trading Justice podcast is proudly sponsored by TackleTrading.com. Get off the sidelines and get in the game.